Hello, today is Friday. It is 5:26 in the evening, August 11th, 2023. The weekend report is titled Short-Term Market Headwinds, and this is your market report. Hi, this is Jonathan Gurney, Portfolio Manager at Gurney Financial. A quick disclosure statement. This post is for informational use only. The views expressed are those of the author, Jonathan M. Gurney. This material is not intended to be relied upon as a forecast, research, or investment advice, and is not a recommendation, offer, solicitation to buy or sell any securities or to adopt any investment strategy. In short, we're trying to keep clients aware of the moves we made, what we're seeing in the market, and why we made the moves we made. So this week specifically, we had CPI, which is inflation data on Thursday. Inflation data, when that comes out, along with, we didn't have a Fed meeting, but inflation data and Fed meetings, those are the two most volatile days you will ever see usually, okay? So you have to be mindful of those, slim down. Overall, the market is kind of in a short-term downtrend. June and July were fantastic months, consolidating some of those gains. So let's hit the charts and we'll go from there. Okay, so let me switch gears. This is actually the second video I made because it didn't save the first one. Okay, so the S&P 500 was down a little bit, 0.31%. We're seeing a little bit of a rotation under the hood. Okay, so what we're seeing is growth getting hit, second week in a row, growth getting hit pretty bad, as well as small cap. So breadth is not good. Many participating names are not doing so well. We got to be mindful of that. So the S&P 500 wasn't terrible. The Dow names are doing okay. So if you look under the hood, what's kind of interesting is a lot of sectors did okay this week. Like a lot of the value sectors did well this week. And I think we're kind of getting that rotation under the hood. We'll see if it can continue. So energy continues to do well. Scooter rating is still very, very high. You're seeing how much technology can drive the market. When you see like the Amazons of the world, Teslas of the world, Microsoft, Google, Apple, if they struggle like they do here, the leading areas previously were consumer discretionary and technology. Just tough weeks overall for those areas, and they drive the market. So that's why the overall stock market and the market in general, the street, is pretty concerned because we are seeing some headwinds ahead. From a breadth standpoint, what does breadth mean? Breadth means total participating stocks in the New York Stock Exchange. How are things going? So we obviously had a huge run, June and July. I mean, that's almost a historic move, huge move in 2 months. If you missed it, you don't chase it. You either short when you see this cross, which we did. We made decent money last week doing that. And so this cross of the black line on the red line is not what you want to see. I'm going to start the timer now so you can see the different things that I'm showing you. So this is the McClennan index. We're going from there. Okay. So this cross, as you can see, like when this starts going down, it goes down kind of quick and ugly. So we got to be careful here. So I personally think we get a bounce here pretty quick. Here's why I think that. The last 2 days, even though the market's kind of been ugly, the VIX, the volatility index, has been trading down. So that's a big move down in volatility for the market to be red. Very, very interesting. But it doesn't usually always happen the same day. So you might have 2 or 3 red VIX days and the market finally get going. So at the close, I placed a long position, meaning thinking the market's going to go up. Very, very small position. Because again, we have to be mindful of this. Here are the positions that I made. Here's what's crazy about this, okay? I placed 12 trades in a matter of 3 days, Monday, Tuesday, Wednesday, okay? A lot of yellow. The yellow is all of Tuesday, okay? These are all Tuesday. All of them were positive trades. I placed 2 trades on Thursday, gave it all back. It was crazy how fast the move was. I wanted to avoid Thursday because it was a CPI meeting. But let me show you the quick move that occurred. I mean, these are quick moves. Like, this is why you don't get greedy, and I didn't. I was trading small. But these are not small moves. I mean, these are 1% moves. Like that alone right there is like a 1.3% move. Okay. And it reversed all of it. And this is where we made some decent money on the short, got long and made some money. So either way, the point being is, if it goes below a key level, you got to get out. You cannot hesitate because this happens so fast. So fast. You see this and you're like, oh, that's not much movement. Well, that's a 1.3, 1.4% move. And really quick. You cannot hesitate. So there are opportunities if you're quick. I wanted to avoid Thursday because we went below key levels. So again, we were downtrend after a very strong move holding the 5-day moving average orange line. You got to be careful here because we're now trending below the 5-day moving average. See how we're getting up to here and we cannot hold. That's downtrend character. And what usually drives that is technology. So we got to be careful with that because technology is ugly. But value names, as you can see here, value versus growth, value is starting to trend up a little bit here. So kind of interesting. That's also shown here where a lot of the value names, energy, healthcare, utilities, really didn't blink. But because these are such big areas in the market, XLK, technology, and consumer discretionary, you can have an ugly week just because of those two sectors. Because the Amazons, Googles, Microsofts of the world are such heavy weightings in the indexes. So kind of interesting, but either way, we are in a downtrend. Why? A short-term downtrend. Why? Because we're below a 5-day moving average, this orange line. We're below a short-term moving average. We're below the 10-day, the 21-day, and the 5-day. So we did get our first bounce today off the 50. We lose that, probably problems. Okay, so we have to be objective about that. But again, my short-term thought is maybe early next week get moving. I hope it does go lower first, but this market doesn't seem to be patient enough, and I think we're getting some clues from the VIX to say, hey, we might get a bounce here soon. Okay, so either way, we'll be reacting. You don't have to have a crystal ball or predict. I'm taking a small play to the long side. I'd MOC close on the close, so I bought at the close, small position. So feel pretty good about that. So let's go over some of the tickers that we're seeing. So you can see value names versus growth did pretty well. So some of the names that I'm watching are Monster. Again, another name that gapped up huge in April on earnings and is consolidating the gains. That's really a really good chart. KKR, again, another gap up in July, holding it very well. Not bad at all. VRT. So the point being is there's a lot of negativity out there, but there's still some areas that are doing really well. We are rotating under the hood. That's not a bad thing. So you have to be objective and say, hey, growth might be running out of gas here, but we're rotating. So Vertiv, I have a lot of friends that actually work for this company. I know nothing really internally about this, but huge earnings gap up, and it's holding up pretty well. We'll see if it can continue to hold. Maybe has to fill this gap first. We'll see. So VRT, Schwab is actually, financials, this sector is actually doing pretty well. But gap up, bull flagging. That's not a bad chart at all. Caterpillar, again, some names that aren't typically leaders are doing pretty well. So gap up and holding the gain pretty well. XLE Energy, again, holding the 5-day moving average is orange line very, very well. That's a really good chart. XOM, same thing, really starting to go. ExxonMobil, consolidated for months, and it looks like this sucker could go to 119. We'll see. On the other side of the coin, some areas that got absolutely drilled by political weakness. People just sold like crazy, but it's starting to get interesting in some of these names. Decent earnings. It's ugly today, but it did hold the 50-day moving average. We'll see. It's still in a downtrend, but it's getting interesting if it can get any traction. Same political issues. Trying to base, but still not much of a trend. Just keeping an eye on these because long term they could have value, but I don't buy things that aren't in trend, and they definitely aren't. So Target's in the same boat, kind of ugly, but looks like it could be starting to base. So we'll see. Don't need to catch a falling knife on any of those. SMH, this is not what you want to see. Semiconductors were the leader. I mean, perfect chart, boom, just kept going. Now we've lost the 50-day moving average. That is a big warning sign. QQQ, the NASDAQ, 100 big good companies, technology companies trending below the 5-day moving average and now below the 50-day moving average. That's a warning sign, okay? And ARK, of course, big time growth names, trending, lost the 5-day moving average and can't get above it. So growth is downtrending. Value, if it can rotate, can hold us up, but we're going to want to give these names, these growth names, a little bit of a breather and get moving quick. Okay. So overall, here's my summary is there are opportunities. There's no doubt about it. Like, you can make money in this environment. So we were down a little bit this week. We still beat the benchmark, but we had a great week the last 2 weeks. So, and last week was not a good week for the market, and we beat the market by about 4% last week. So overall, we're hanging in there. Under the hood, what's happening with the merger? I want to talk to you about that. So it's essentially 3 companies are coming together as one, and it's a ton of compliance. It's driving me nuts how long it's taking. Of course, like, as a trader, you want to be quick and efficient, but the reality is the state is kind of holding us up on a few things. I mean, here's the reality. I'm working from 9:30 to 4 trading, and all the other hours somehow I have to find time to do all the compliant paperwork, submit it to the state, waiting for all these different things to come back. So we're right there. I wanted this done 3 months ago, but some of it's out of my hands. But overall, we're trading okay, so that makes me feel better. But really looking forward to showing you probably in about a week and a half or 2, maybe the end of this month. We're getting things squared away with the website, bank account information, just making sure everything's tight, and new emails, new phone numbers, all that jazz. So thanks for your patience. We're about there. Trust me, I want this to go as fast as possible too, but we're making sure we do things right, which is so important in the financial industry. Don't want to mess that up. Trust me. But thank you guys. Overall, not a bad week. After a really nice week last week, we took shots. We did what we should. Again, I was 10 for 12 on trades. Still ended negative, not by being greedy, but it just knife caught. It just went down. And I, even with a stop, it got me out, and we were still down decently on that trade. So we protected when we needed to. Overall, the market's kind of in a situation where we're downtrending, but how soon are people going to say, well, I missed the rally, so I need to start buying here? And that's kind of the situation we're in right now. So we'll see. We'll see how this resolves next week. So thanks, guys. Have a good one. Bye.